What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Campbell Diehl. How you doing today, Campbell?
I'm good, Dan. How you doing, man?
I'm fantastic. And I'm not wearing my dandoesdeals.com hat today, and maybe it's fate, but anyway, the thing I got to share with you on top of that, though, it's a big surprise, but my very favorite audience member has joined us today. And why is my favorite audience member here? Well, it's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, stuff like that. Now, why would I do such a thing, though? Well, if you've ever heard of private off market or 506B deals, then you might know that you have to have a documented prior substantive relationship so that you can show it to the SEC for when you get to a certain number of assets under management and you get audited, just to make sure you're not publicly soliciting people. So that means I have to have them on here and figure out what is your level of sophistication, your appetite for risk, your core competency that you look to contribute. But the good thing for you is you learn how to effectively communicate on the subject of commercial real estate. But before we get too excited about Campbell's business, Campbell, do you want to say a thing or two about yourself?
Yeah, I'm based out of Atlanta. I'm cutting my teeth in multifamily syndication, and I'm loving every bit of it at the moment, and excited to be talking to Mr. Dan here.
All right, awesome, awesome. And so that brings me to the next part, which is the distinct motivations. And that's unique for everybody. But before we get into them, I got to say, but wait, check your eight. Hey, Campbell, can you see through your camera? Maybe you can see the user's device down at your 8 o'clock, and you'll see this awful subscribe button. And maybe they should smash that. Anyway, it's a silly thing to say, but anyway, I put it in the beginning of every episode because it actually helps people get me on my way for YouTube to monetize this stuff. But the five distinct motivations, I've spoken to a whole whack. That's not metric. A whole whack of commercial real estate syndicators and investors, and everybody has their own unique why. But at the same time, we need to know what it is to know why will somebody actually follow through with one of these deals. It takes months, there's risks involved and that sort of thing. And I find that even though everybody's motivation is unique, they fit pretty cleanly in these five categories. The first one of which is preservation of purchasing power. What on earth does that mean? Well, if you already have a portfolio of assets and the way that you make ends meet is from the proceeds of ownership, then why would you bother making a new acquisition? Well, if inflation is eating away at the purchasing power of that cash flow, that's one reason why you'd make a new acquisition. And the other one would be is if you're buying at a steep discount, like if there's an asset crash or some sort of distress. Now, that is not really what I'm up to. I wouldn't describe it as preservation of purchasing power. More what I'm up to is trading time for wealth. And what that's all about is when you are a high income earner, a high salary earner, something like that, you'll notice you're paying a whole whack of tax. Me personally, I come from the CRM industry. So that's the online funnels, IT, websites, and managing your lists and the mass emailings and all that kind of fun stuff. Through funnelfixing.com is the agency right now. But what hit me is in 2014, I started working full time for a guy in Cleveland, Ohio, and he was flipping 10 houses a month. And I was going, well, wait a second, I seem to be paying more in tax than anybody else. So how can I pivot to where I'm getting rewarded in the form of deployed capital, aka equity. So that's why I'm involved in deals. But that's a little bit too abstract for some people, especially youngsters. And what they really are up to is they want to take control of their schedule. They want to be able to stop having people tell them what to do all the time. And maybe that means they want to fast track retirement. Maybe it just means they want to work fewer months per year or fewer weeks per month or something like that. And that's why they're looking to basically scale it back. But that's quite different from the next group. They're just plain ambitious. They want to buy their entire hometown. Now, why would somebody want to do that? Well, maybe it's because they want the generational wealth. They want to make sure that their great grandchildren are not only provided for, but they never have to work a day job or something like that. And that's fantastic because these people will hustle into their 90s. But that's slightly different from the motivation of this fifth group. And they've picked a sector of society. Maybe it's animals. Maybe it's the environment. Maybe they want to send people to space. Who knows? But they figured out that there's a financial component to that, to making a big impact. And that's why they're making these acquisitions involved in these big transactions. But Campbell, of those 5 different motivations, what combination of those would you say describes you best?
Well, yes, I guess, right? I want to buy my hometown so that I can fast track my retirement, trade time for wealth, and then help the people who need it, right? So, that may be cliche, but all of those things resonate with me. I can find a reason within each of them that is valuable to me in my mind. I think helping people is a big one, right? There's a lot going on in the world, a lot of things that can be helped. It's hard to pick one, right? I mean, but there's a lot of passions, around supporting communities and mental health and homelessness and people that just all around need support in general, right? And then of course, putting my family in a good spot, right? That's always number one. So.
Absolutely, absolutely. And of course, there are risks involved in commercial real estate. And what I have to make sure of is that I know people's understanding of what an illiquid asset is. It means like when you invest, then you can't just pull the money back out like an ATM. And if you've ever been involved in a 506B deal, then whoever the securities attorney that helped out with the registration with the SEC for your exemption, they're going to insist that there's some sort of suitability questionnaire, like when you're at a registered investment advisor's office, and they're going to ask all sorts of financial questions that are really, really invasive as far as I'm concerned. Basically, the syndicator will know more about your financial situation than you may know about your own parents' financial situation. But there was one question in particular that I thought was pretty prone for unreliable responses, and it was the tolerance for risk assessment one. So I made my own one, which is a fill in the blanks question, and it is: there are many popular investment asset classes, but I think blank is too risky. So Campbell, as far as you're concerned, it can be inside real estate, outside real estate, it doesn't matter, but what's too risky for you?
I think anything really cyber related, you've seen crypto go up and down, you've seen NFTs just fall out of the sky, right? Any kind of that fad, anything that seems like a fad that kind of comes in a big wave and just skyrockets right to the moon. To me, if you're one of the lucky ones that can jump on early and know when to get out, good for you. I like something a little more long term.
I love it. I love it. And it especially resonates with me just because, having built these websites and online funnels for different businesses for this long, like I see things like Amazon.com shops coming along, and it's like, well, do you know the history? Because, Bezos has kind of a history of not treating his vendors so well. So if you think that that's not fly by night, it's like, watch what these guys who are 7 figures and up in revenue, what they're up to. So that's what I do. And I'm just eating it up like a subscribe sandwich. Doesn't that sound delicious? I just love those things. But that's what reminds me to pull out the Dan Does Deals Commercial Core Competency Cube, and you can get your own copy for free. You just go to dandoesdeals.com, and like a complete dummy, I don't even ask for your email address. And from a marketing perspective, the website business in general, never give anything away without asking for some sort of contact information. But I do that because I want you to go there and print it out, and I want you to practice discussing these 6 different sides and describing exactly what they do. Because if you're going to make it in this industry, your ability to communicate effectively is going to be the determining factor. So you're definitely going to have to get that straight. And in every episode, I spend 2 minutes to go through the 6 sides so that you can understand how my guest fits into those deals. So let's start with the repositioner, who's an acquisitions person. They're looking at a bunch of different properties. They're doing a bunch of different paperwork. The paperwork isn't exactly exciting, but there's a fancy word for it. It's called underwriting the deal. And when you're underwriting, it means you're doing the math, you're doing the arithmetic, you're figuring out, first of all, is this property even making the amount of money that the broker or seller claims it is? Because I don't think so. So that's one of the things that makes the repositioners special. They're doing this math and they're making these assumptions, figuring out how can they change how the business is run, or at least its balance sheet anyway, so that there's more upside. And one thing that's a little bit counterintuitive about what a repositioner does, every repositioner has to have some financier or investor relations. So that's relationships with different lenders, the different banks and whatnot. And a financier, just to be clear, that's somebody who only deals with paper and money, and that's it. So they're not on a GP team. They're not involved in any of that sort of things. You might be a fund manager, which is still the same sort of deal. But the reason why repositioners have to know lots and lots of financiers is because if you can get a more advantageous loan, that goes straight to the profitability of the building. But the repositioner is more likely to first look at the operations to get them more efficient and stop those Benjamins from going down those toilets. But of course, there's more to operations than just unclogging toilets and making sure maintenance gets done, like mowing the lawns and things like that. One of the rather unthought of features is marketing. And that's something that I bring to my GP teams, which is, of course, even if you are in the 100 unit or more range where you're outsourcing property management, if you've got a vacancy rate problem, somebody with marketing chops has to come in. Of course, I'm an open book as far as helping with the automation and other things like that. But at the end of the day, operations, there's only so much wiggle room. So the repositioner will next look to go to a contractor team to do renovations, to do a value add. The idea being that the next resident will be more than happy to pay more in rent than the previous one if it's a nicer place. So that's why you get the contractors in to make those improvements so that they're more enjoyable to live in. But you have to be super duper careful when it comes to these contractor teams. You can just dump endless amounts of money, and they might end up dragging their feet while they're working for somebody else while your units are empty in a turnaround. And so the big fix for that, especially if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that will not be me. I'd still be stuck at an airport in an hour or two. So having those boots on the ground are absolutely vital. I've seen some buildings go out of business just because they skipped that part. Like, okay, I'll try to keep it positive. But anyway, when the repositioner has assembled this team, just like the Avengers, and they figured out, oh, I know a property that I want. It's 350 units. It's tens of millions of dollars. So they turn around to the financier and they say, hey, got, I don't know, tens of millions of dollars you want to lend us? And of course, the financier will have one other question that you might be surprised if you've gone through different gurus programs, different coaching programs, because they kind of gloss over this question. It will be, who is the sponsor? Who's the KP? What is that all about? So in the hypothetical situation, if you're an engineer or a physician or an attorney or something like that, and you get the idea of investing in your backyard so you and your friends take over the local apartment complex, well, there's a problem that you're going to run into, which is you guys are not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. Now, that means if it's 350 units, somebody has to own a 350 unit apartment complex, or you're just not going to be eligible. On top of that, you're going to need a certain amount of liquidity. And then among this ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Campbell, as far as your background, your core competencies, you're a bit on the younger side. So, like my guess would be that you have the repositioning duties. And as I said, everybody has some investor relations. Some people are heavier on that side than others, and then they help with asset management. But I don't want to put words in your mouth. Where do you see yourself fitting into your next deal?
I think, yeah, I mean, investor relations has stood out to me since I've started my venture and all of this. Everyone needs capital for any type of investment that's going to be going on. And so I think that's the quickest way to add value, given that I'm new to this whole thing. And so I think I can find and explain pretty well to people that are looking to invest their capital in things that maybe not are traditional, like a stock or a bond or what have you. That there's opportunities out there and maybe higher returns, hopefully, in these scenarios. And I think I can do that. And then all in the meantime, partner with people that have, greater level of experience than I do, learn from them, grow alongside them, and expand from there.
I love it. I love it. And that brings me to the buy box. Now, of course, you mentioned, that you want the more experienced partners. And so when you're first getting started, it's kind of up to the deal sponsor as far as what you're going to be able to join in on. But when investors or syndicators are asking about your buy box, your ideal property, we're really talking about three things. The first one's geography. Where is it? Which state? Which county, possibly even which neighborhood. That's all going to matter. The second one's going to be size. Now, most of my guests here on Chance Encounters are in apartment complexes, which is called multifamily commercial real estate. But the way that you define size when it comes to apartment complexes is by unit count. The idea being that you have a completely different type of team who takes over 5-unit apartment complexes compared to the ones that take over 150, 350 unit apartment complexes. So that size definitely matters. If we're talking about other commercial real estate, it might be still unit count, it might be by square footage, but that size will still absolutely matter. But the third one is called class. And unfortunately, that word is used for two completely different things. And those two things, in my own terms, are condition, and then the other one is area. And if you're talking about condition, it's talking about how old is the building? How beat up is the building? Is it up to date? Is it full of amenities and luxuries? Or is it kind of no frills and bare bones? That's the condition. Now, when I'm talking about the area, though, we're talking about what's the crime rate like where the property is located? What about the school districts? And then, of course, when they say location, 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 what they actually mean is traffic, traffic, traffic. Do a whole whack of people go by that property in a given day on car or on foot? Then it's going to be more desirable than one that just has a trickle of humanity going by. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top, and then A minus, and B plus, and so on. So Campbell, as far as you and your group that you have right now, what's easier to say yes to and more difficult to say no to?
Yeah, so what we're looking at is, from a property standpoint, B minus to C plus, maybe even some C minus, depending on, how it looks, right? But, anything in the range of 80 to 250 doors, with some value add repositioning opportunities like you've been talking about. Obviously skin on the bones only going to help. And then similar class of area, right? Really looking for emerging markets, areas that are in the path of progress that, maybe we can catch a little bit of a tip on that, there's going to be some progress down the road, or it just seems like an area that is going to be kind of up and coming at some point in the future. So that's primarily what it is.
All right, beautiful. And so, sorry, did you say that it is near Atlanta in Georgia, right?
Yeah, Atlanta. Sorry, good point. So yeah, my initial focus from an acquisition standpoint is the Georgia market, Tennessee, South Carolina, North Carolina, within an earshot distance of me. If I'm raising on a deal, maybe a little bit broader of a scope, but if I'm bringing it to the table, I want to be able to touch or feel it.
Makes sense. And so that way you have the local part as well.
That's
But one of the fantastic things about commercial real estate is because it's multifaceted and nobody's going to be all six sides of the die for any meaningful amount of the time. But of course, guys like me who are from the internet, we need to understand those six roles to a much greater depth than people who really have the local advantage. But even though we're also friendly and eager to help build new teams, we still have our own unique skill sets, and that means we're more able to make a disproportionate difference to some people more than others. Me personally, it's the sponsors and KPs, because between my CRM experience with lists of 250,000 people or more on them, and then also when it comes to the live events, the streaming events, the different coaching that may be involved, sponsors and KPs in general, they're going to have more of a foundation in place, so they have more ability to have somebody like me make a difference. And then the other thing is, of course, boots on the ground. I'm always eager to talk to, because I'm from the internet, so that's the ones that are most obvious. But Campbell, as far as you're concerned, if you have any 506B deals going on, don't mention it specifically, especially asking for passive investors. But it's okay to say that you need more financiers in your network or whatever. But I don't want to put words in your mouth. Who are you disproportionately well suited to help?
Financiers, I think you nailed it. Yeah, I mean, need more of that. Need more capital, people that are interested in opportunities that I can develop relationships with, and hopefully bring something to the table for them.
I love it. I love it. And then that brings us to how to reach out. And me, I'm kind of lucky. If you want to, it wasn't that great when I was writing tests and assignments in school, but I got this big beef eating last name. It makes me really easy to find, especially on LinkedIn, which is where I spend most of my social media time. But if you scan this QR code right here, that goes to the FAQs page of 506B.me, which is the platform I created for you to outsource the documentation of your prior substantive relations that you need to give the SEC after you've been doing enough syndications. And it's really, really important to have that documentation in place. You have to prove that you actually knew people before you had that PSA signed. But Campbell, if people want to reach out to you, social media, email, phone, website, what's the best way to run out?
Yeah, I'm on Facebook, Instagram, LinkedIn. My company is Vu Carre Capital Group, and because I had to name it something fancy, it is hard to spell. So that is VIEUX space CARRE Capital Group, and you can find me at any of those, or my name, Campbell Diehl, Diehl. Not Dan Does Deals, but Campbell Diehl, and anywhere on any of those as well.
All right, I love it. And that brings me to my public service announcement for you. It's not for you, Campbell, but if you've been watching this episode and you're being like, what is this pain in my eyes? It's like searing, it's and like migraine. I'm confident it's the hideous subscribe button that's just down there, and you can hit it, and it doesn't cost you anything. And I'm eager for a bunch of people to start hitting it, because YouTube will start paying for these videos instead of me. I think that would be amazing. The trade-off for you, just so you know, my videos may show up on your list of suggestions. There's no guarantee about that either, but you can go ahead and ignore those suggestions. Quite frankly, I just appreciate the fact that you spent this time with me. Just like Campbell, I appreciate you joining me today. It's been great getting to know you a bit better.
Likewise, sir. Likewise.
Awesome. Make sure you 506B.me. Any syndicators, make sure you 506B.me. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B.me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B.me, everybody.